Okay, 12th of April, Rudy here. Welcome to the weekly investment show, the public one, the free one. No longer doing the free daily ones. Too much work for the Rooster and I. We just do that for the members now, paying members, $10 a month. Anyway, so ASX 300, very strong week. Big bar, so the war's over, but Israel keeps bombing them. I honestly have no idea. Um, anyway, we can just follow the charts. That's all it can really do. I think we'll struggle to make all-time highs on this run. If we look at the big sectors, so not tech, so the financials. So they've had a strong week. I think they're just going to trade in a range long term, but let's see. The materials. So materials have had a strong 3 weeks, so they're probably due to have a bit of a relax. So that all comes in line with a bit of a topping pattern on the ASX 300. So this is the materials over the ASX 300. So I still think this is where you want to have your bias. That's sort of when we started going materials focused around this second quarter of last year. I think that's still where you want to be. So the energy sector. This is ASX Energy. So just having a bit of a chill. We'll have a look at the oil price a bit later, but it doesn't look like it's going to crash. Our gold miners. So they were a nice buy a couple of weeks ago. So still looks good. Our tech sector looks crap. There's a nice shooting star. Had everyone getting a bit excited beginning of the week, and then bang. So that looks really. I think we've got a test coming on down here. Consumer discretionary. So we hit our measured move here, so we're having a bit of a bounced all-time highs. I don't think so. The staples, so there's chilling as a staples would do. The healthcare sector, doing a bit of a tech sector, isn't it? Right on support. So it's all going to depend on this big fella here, CSL, who we now did try and pick a bottom and said nah. So that was, and I understand Australian Super cleared the deck, sold down a lot of their CSL, so that a lot of hard work. If you're in it, pull the band-aid off. So the VIX in America, so we've finally broken below support, so getting into a bit of risk-off territory, which is good for the share market. And that came through. So the S&P 500, so it didn't end up making its target. So Trump, the old taco, he was watching the share market. They said, "Oh, we need to do something. Stuff Israel." Anyway, but it's left a gap, and gaps like to get filled. So that's the so like you wouldn't be entering new positions, but at least it shows that someone's watching. The Nasdaq. So well, it got closer to a bit of a measured move, but again, it's now broken up quite strongly. So that's led by the king Nvidia. So Nvidia saved himself from breaking these support levels here. The mags. So the mag 7s are looking good. The software sector in America, which is more aligned to our tech sector, looks very sick. The semiconductors, this is if American tech's gonna continue to drive the share market, they need this sector booming, so it looks like it is. So the old semiconductors over the NASDAQ. So again, it's interesting, we're at a measured move here. But anyway, that's good for the overall tech sector if semiconductors are outperforming the NASDAQ. Financials. So there, is that a kiss goodbye? So it still looks pretty, I would not call that bullish. Materials, American materials. So they look pretty good. Global gold miners. So they look pretty good. What have we got here? Okay, global gold miners over the S&P 500. So it looks like that trend of outperformance continuing. The XLE energy sector in America. So it's well, it looks like the short-term push is off. We'll have a look at oil prices. Still some pretty big projected long-term targets. So nice. Yeah, well, it'd be healthy to actually have a bit of a pullback and then have another go. Now this is interesting because this is consumer discretionary in America, which looks a lot healthier than our consumer discretionary market. And consumer staples looks pretty flat. So you would have thought it would be sort of reverse, but so it looks like so this is staples over discretionary. So this implies discretionary to outperform staples, but if people are hurting, I think it goes to that theme that there's like the top 20% do all the spending, and the bottom half of living like shit, or not living well, I should say. It's more appropriate wording. Anyway, okay, so Israel. So the Israel stock market, it's bang off. The Dubai share market, so it couldn't finish the week above the breakout range, so we've now set another range for the week. Is it time to buy some property in Dubai? Hasn't been confirmed yet, so again, still trading in a range. I mean, that's a pretty good wallop to get. It's got to digest that move, but maybe go having a look around. India. So India's had a strong week, but again, it'll take some time to digest that. It needs to form a bit of a base. It'd be hard to see it doing that. China. It's trying to form a bottom, but not yet. Emerging markets, they don't look too bad actually. Okay, your high growth super fund. So we're up 8.5% 2025. Now we're only down, so we're this is break even. So we're having getting close back to break even for this calendar year. So this is the old favourite. If you had a materials bent with your super fund, you'd be having a lot more money in your super. Join the channel, $10 a month. So VGS. So VGS is, well, it looks like there's a bit of a bottom there. So obviously if America does well, then this will do well. Still a bit of work to do. Okay, the old VAS over VGS. So for a very long time, you did not want to be in VAS. You wanted to be in VGS. You would have been a lot better off. But has the tide turned? Should you be a move like that implies, well, actually, so since November 25, VAS has outperformed VGS. And then we know that our material sector is outperforming VAS, so you get the gist. Anyway, you heard it here first. Interest rates. So Aussie 1 year rates, so just stubbornly up there at 4.7. 5 years, finding comfort at support there. So your bond. So your so this is VAF, which is your bond prices falling down because interest rates going up. US 5 year rates still forming this channel, break to the upside. US 1 year rates. So very interesting to see what the Fed's going to do. Because they can't control this, but they can control this. So international bonds, so they just got walloped last week. I hate to be invested thinking you're in a safe bond ETF. So that goes for your super fund. If you're in a conservative super fund, the return's not doing too well. The US dollar. So it's not bearish yet. So technically it's neutral to bullish, but it wouldn't want to close next week below here. Otherwise, that would still not actually, like if you look at that chart from an unbiased point of view. You could say that's a bit of a rounding bottom going on there. I know everyone thinks US dollar's crap, but you got to compare it to so is every other currency. So the Aussie dollar, US AUD, USD. So we've peaked. Is our currency any better than the US dollar? I don't know. We're off begging to Singapore for petrol. So the Chinese yuan against the US dollar. So maybe we, what does that say? Gold price. Okay, so we're at an interesting juncture here. So we have a potential move to here, but we've got one of these rising wedges channel things. So a close below would imply a test down again. If we look at, we sort of, that's, so we're not out of the woods yet. So the same goes with silver. Silver actually looks a bit more constructive, but again, we're waiting for some breaks higher. Platinum. So platinum's eking out a bit of a, maybe another test down and then go, but it looks okay. Palladium, similar thing. Now Dr. Copper, he looks pretty good. So he's got this little, it'll probably trade sideways, but that's a nice little 3-week jump. Still got big target prices for Dr. Copper. Okay, oil. Okay, so US oil. So it's not looking bullish, but I mean, this is daily, so we're holding it. So that's still bullish because you're holding it the 20-day, like a test of the 50-day is still in a technically a bullish setup, but the futures, so this is December oil futures, so they're not falling over. So there's still some demand there. There's, still not clear, this whole oil play. Dubai. So this is Dubai oil. That was US oil we're looking at before. So Dubai oil's come down to the point where the premium, well, there's basically no premium again. So US oil and Dubai oil are trading at the same. Well, historically, there's always been a bit of a up and down there. So US natural gas, so that's broken this support here. So there's plenty of gas over there. Whereas Asian natural gas, I think this is where the problem's going to be, because too many things have been blown up. So the oil will flow, but the gas might not. Anyway, Asian gas remains elevated. This is our East Coast gas, so according to the market, plenty of it around. Iron ore. So it looks like we're just going to settle into a little bit for a bit of a range, which isn't great for our big boys, our big miners who rely a lot on iron ore for their revenue. Lithium elevated. Spot uranium starting to get a bit of a bid. Thermal coal, so it's pulled back but technically healthy for a bull market. So see what happens around here. Coking coal, so this is implying the steel business getting back on again. So that's positive for growth, world growth. Nickel still consolidating there. Aluminium, so that remains elevated. And then we'll just finish off with a cup of coffee. So go and stock up on your coffee because we're down in the lower bit of the range here. All right. Hope you have a good week. I'll see you next week. Otherwise, join the channel. See ya.